Salil, you talked about some of the work that's being done on AI, the 300 agents that are already working at Infosys. You talked about the small language models that you've been able to develop as well. One of the other comments, stroke criticisms that's come in is that Indian IT companies are focused too much on buybacks, and capital should be deployed more on R&D and innovation. Do you believe that given the changes that we are faced with globally at this point in time, that there is perhaps a need to review your capital allocation strategy or capital allocation policy and perhaps do more internally as well, but also look at big ticket or small ticket acquisitions to bolster your AI capabilities?
So there, I think first on acquisitions, without a doubt, we have always have a view onto what type of acquisitions we want to look at. And AI is very much into that strategic domain where we will continue to look. And as we've done, if you look over the past several years, we've done acquisitions that have helped us in advance. For example, we did some acquisitions on SaaS models. We did some acquisitions on engineering services. We recently did an acquisition on cybersecurity. So in that light, AI is part of it. We continue to look at it. In terms of overall capital allocation, the point you made, what we see is what I was sharing earlier with clients looking to us for technology and where that is going. We've then made several investments in reskilling all of our people. So about 275,000 people have been reskilled within Infosys into different levels of AI. We've put investment into building what we were describing, what we were discussing, these small language models. We put investment. We are one of the largest users of GitHub Copilot. We made sure that that is being used to actually develop lines of code which are accepted and used by our clients and internally. For our own product in Finacle, we've used investments to make sure it's more AI ready. And we've been very focused on internal cost and efficiency to make sure that those investments are done while keeping in mind all of our stakeholders and what they are looking for and what we are providing to them. Keeping all that in mind is where we are driving the business within Infosys.
Okay, so you don't see a need to change the way that you allocate capital at this point in time?
So there, a capital allocation approach where we return 85% of the capital cash that we generate over a 5-year period remains what it is. However, we do have an approach within that capital allocation policy of the acquisitions that we talked about, that we discussed earlier.
So Salil, I just want to go back to the headcount comment that came in there from CP Gurnani. Your headcount is down over 12,000 over the last 2 years. Your headcount now stands at about 3.23 lakh at this point. Would it be fair to assume that this is the kind of number that you're going to be working with in the foreseeable future? You gave us some indication of your recruitment plans staying on track, and you also said that you're not looking at rationalizing your workforce at this point. Would it be fair to assume that this is the kind of headcount number that we would be looking at for Infosys in the foreseeable future, the current headcount of about 3.23 lakh?
So there, what I can share with you is, if you look at about a year ago, so end of the first quarter a year ago, which is about the same time like now, we are about approximately 8,000 more employees than we were at that time. Now, again, for this year, we have a growth guidance of 1 to 3%. And with our recruitment, we will continue with the recruitment in support of that growth guidance. One of the other things, in addition to the 8,000 approximately higher headcount that we have from 12 months ago, is we have also improved what we do in terms of revenue efficiency per employee. So those two elements together will continue. Here, with the growth that we're looking at for this year, and we look, as you know, on an annual basis, we will continue with the recruitment, which will support the growth.
I also want to understand about margins, Salil, because the guidance is about 20 to 22%, and you've had this Project Maximus in place now for the last 2 years, pretty much. But we haven't really seen the needle move too much on account of the many measures that you've taken. So is there scope, is there room for you to be able to eke out more to boost margins any further?
So on the margins, we've put in place a very strong program. What that has helped us to do, and we started that quite early, it's helped us to be ready for what turned out to be a changing environment. It also helped us to make sure that we could continue to make the investments that we have made as we scaled up AI, as we scaled up cloud, as we scaled up data, cyber, engineering services, enterprise solutions. So all of that needs investment, building the small language models. And we were able to do that while making sure that we delivered the margins which we had given as our guidance, and as we wanted to be, make sure that all the stakeholders were benefiting from that.
Salil, I'm going to try and get you to respond in yes and no, and I'm going to throw back to you again comments that have come to us from various quarters, from other CEOs that we've been speaking to. So to start with, do you see this as an existential crisis for the Indian IT services sector, yes or no?
So Shereen, my view there is, and I know you want that type of an answer, but my view is technology is becoming more and more critical for clients. AI is more critical. Infosys has invested and built out AI capabilities and other like supporting capabilities, data, cloud, and that becomes important for clients. And for us, we remain well positioned to support our clients.
From a client's perspective and from your perspective, do you believe that AI is likely to be deflationary? That's one of the other comments, stroke concerns that we've been hearing of. What could the impact be as far as pricing is concerned?
So two parts. I think on the first part, I go back to how I was sharing. There are two components of AI as a composite. The sense we have today from the market from what we understand, that there is a larger addressable market. And we have to make sure that we keep up with that to do more of the new work and to make sure we get the benefits of efficiency. On the pricing, depending on the type of area that one is focused on. For example, if there's work which is more focused on customer service, the productivity benefit that typically is available there, that is usually shared with our client. And so there, what was being done previously, there is an efficiency to that comes in. Typically, we've seen in many examples, either it's new work that we have won from somewhere else, or we are beneficiaries of consolidation. But if you look at a specific area like customer service or other areas, there is a sharing of some of the productivity benefit.
Okay, a sharing of some of the productivity benefits, which means that you don't exercise as much pricing power as you previously did.
So yeah, there is a sharing of the productivity benefit.
Okay, you talked about a mega deal. You also talked about the large deals that you won. What is the expectation, since you talked about the expansion that you foresee on both mega as well as large deals, and the fact that you hope the macros will stabilize, if not normalize?
So on the macros, so it's not so much in terms of a hope, it's more a point of how it will evolve, and we will watch how it evolves. On the large deals, we had an excellent first quarter at $3.8 billion, a very strong execution on large deals. Some of it, actually, we benefited from consolidation decisions of clients. We see large deals is always a little volatile because they are lumpy, but we see the large deals activity fairly strong. We had one mega deal in Q1. Mega deals are few typically in a pipeline, but we do see mega deals in our pipeline. So overall, the large deals approach will continue with usual sort of what we see. There's always volatility, but if you look at a longer period than a quarter, we should see good traction on large deals.
So, Salil, let me end by asking you, given where you find yourselves today and the measures that you've already taken, you don't see the need for any significant change, redesign, reinvention within Infosys at this point in time? And two, from what I'm hearing from you, would it be fair to say that you're fairly sanguine about growth as well as where you find yourself? You don't sound particularly perturbed or worried. Is that a fair assessment?
On the first, I think the changes are some things that we've put in some time ago with the attention on AI, with the attention on some of the new areas on cloud. And we have to continue to do that. It's not that we don't have to do that. However, we see technologies being more and more critical for large enterprises, and we need to be on top of it. Equally, also some of the things we've started earlier, for example, on the measures of internal cost efficiency. So we remain constantly efficient. In terms of what we see for this year, we have increased our growth guidance now 1 to 3%. And what we see today, for example, as we closed and announced our results last week, we see that's the growth guidance for this year, which will support that we will do this for college graduates, the 20,000 recruitment for this financial year.
I know it's hard to get you to move away from either the quarter or the year or your guidance, but we do appreciate you joining us, Salil, and giving us an insight on where things currently stand for Infosys, but also how you view what is happening for the industry and the many changes that the Indian IT services sector will have to brace itself for. Appreciate you joining us here on the record on CNBC TV18. Many thanks for your time. That's Salil Parekh, the CEO of Infosys, in conversation with us, believes that there is going to be more opportunity while they continue to focus on cost optimization and cost efficiency, but they're also hopeful that as the macros stabilize at the enterprise level, there will be more expansion of opportunities. A key point being made there on both utilization, which continues to be strong, as well as consolidation. So Infosys winning business perhaps from some of its peers as well. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.